How do you get your ETF fees paid for you? That's what I want to show you here. Good news, it's just a small little consideration on your part, but it can have big impacts because think about it from a compounding interest viewpoint. The more money you have left over in your pocket, well, the more money you have for that compounding interest to grow and grow and grow. So as far as I'm concerned, the more money we can keep in our pocket, and a great way to do that is to get fees paid for. That is going to be better from a long-term, bigger picture point of view. So let me walk you through how this all works. First, we'll set up a little context, and then we'll get into how the numbers work out, and nothing anticlimactic, very, very straightforward. Now, the whole process starts with that question, how much money are you using? And for example's sake, let's just say you're gonna use $1,000. Well, the first thing we need to consider is, okay, what is the expense ratio of that ETF? For illustration purposes, I'm gonna use the ETF of GCOW, one of my favorites. I'm not gonna get into why it's my favorite, but if you wanna do more research on it, then go for it. But we're gonna use GCOW. So our question was, what is the expense ratio? And I'm using Yahoo Finance for this, but this will be done and can be seen on any sort of financial platform. But what we're looking for is the expense ratio, and you can see right there, 0.6%. So in order to make this all work, we need to get out our calculator, and the math is very easy. The amount of money you're using, you want to multiply that by the expense ratio, which we now know $1,000 we're using. We got to multiply that by the expense ratio of 0.6%, which means that $6 per year are those fees. So in other words, for every $1,000 you're investing, it's going to cost you $6. Now that's not a whole lot of money. So this is why I want to also disclose that what I'm showing you is not some sort of holy grail. I'm not saying it's going to make you a billionaire for sure. I'm just showing you that there is a way where you can get these fees paid for, which the more money in your pocket, the better. And the more and more thousands of dollars you get, that's where those things can add up. But I understand before you start typing in the chat room or the comment section below, well, Clay, technically speaking, and I'm not saying this is the one size fits all strategy. I just want to get it out there so people are aware that, yeah, you can get these fees paid for. So $6 is the number we need to keep in mind. But we now can ask ourselves another question, and if this question has a yes to it, well then we need to take it one step further. So let's get into this next phase. So the question you need to ask yourself is, what is the dividend yield? Now, if there is no dividend yield, well then you're just going to be paying the fees right out of the hopefully profits. But that's the thing is, if your investment goes down, now you're paying fees on top of something that's going down. So if there is no dividend, well then it is what it is. But if there is a dividend, well then at least you need to now consider, okay, well how much is the dividend? So let's keep on moving. And for GCOW here, the dividend yield, so not all of them are going to say dividend yield, some might just say yield, but right here, 6.07%. So once again, we'll do some math, very straightforward, amount of money you're using, but instead this time you're multiplying that by the dividend yield itself. So $1,000 multiplied by 6.07% means you are getting paid $60.70 per year for every $1,000. And you see that, well, yeah, that $60 amount is quite a bit more than the $6 amount. So in other words, when you can find those situations where the dividend yield is higher than the expense ratio, then you are completely getting those management fees paid for. Because remember, that's what an expense ratio is all about, to pay the people that are managing that fund. So if you can find those situations where that dividend is greater, well then those fees are paid for with money left over in your pocket. And for kind of, someone would call me a cheapskate, I would like to call myself frugal. For somebody that's frugal, you gotta like that setup right there. Again, this is not a one size fits all strategy, but it is a way you can go about your investing that will, like I said, get those fees paid for. So I hope this helps. And there's some out there that pay the dividends, there's some out there that don't. But ultimately, when you walk yourself through this thought question, or walk yourself through this process especially, and ask those questions, then you're going to have a better idea of whether or not you can get your fees paid for or not. But that's all I have for you. If you have any other good ETFs that you would recommend, like I said, GCOW is one I like. But if you have any others where that allow you to get your ETF fees paid for, then let me know down in the comment section, let others know, and then people can go out there and do further research on it. But that's all I have for you. So like I said, let me know your suggestions down below to other ETFs. And if you have any other questions or anything, again, leave those down below. Thanks for watching. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.